What the heck is going on with Google stock? Why does it keep falling? And does it make sense to purchase at these current levels? That's what we're going to talk about in this video. If you're more of a short-term trader, I'm going to start with the technicals and then I'll jump into the fundamentals. And I'm also going to briefly look at their most recent earning report just to go over a few things to keep your eye on. So let's get started. All right, so I have Google pulled up on the daily time frame and you can see from here that this has been another bloodbath. I mean, this has been falling straight off a cliff and it has not bounced at all. I mean, it looked like we were going to attempt to bounce here and then we just completely sold off even more. This is a pretty big move for a company this big. Now, with that being said, if you are more of a technical trader or a short-term trader, I would look at taking a position off or around this line of support right here. You can tell previously that this was a resistance that was hard to break above, right? And then when we did, kind of rocket shipped up there briefly and then came back down. We tested it and then bounced off it again. So this is going to be a pretty good support level in my opinion. Not to mention, we are also at the 200 moving average, this yellow line. And typically anytime, a magnificent 7 stock gets around this level, it's usually a good time to buy. You can tell, usually bounce off of it every time we get there. You can see we pierced it here and then rallied up, and that could be what's happening here. But with that being said, you want to manage your risk. All right, so if you were to take a trade here, I would look to take profits here. Again, if you're a short-term trader, because I think this is where it could get rejected at. And then I would put a stop loss under this support level here. All right, so I mean, for example, let's just say you went in to get into a trade right now. I might put my stop loss, under here. You might want to give it a little bit of room to breathe. But I do feel that if we break this level of support, then we're probably coming down to the next major level of support, which in my opinion would be around 161. That's all I have when it comes to the technicals. Now let's jump into some of the fundamentals, and I want to look at their most recent earnings report real quickly to start. All right, so in this article by CNBC, you can see the headline: Alphabet shares drop as much as 9% on revenue miss and soaring AI investments. Okay, so this is going to be one of the culprits of why this stock is seeing a lot of downward pressure. You can see their revenue missed by just a little bit and their earnings per share missed by 2 cents. And, their YouTube revenue is looking pretty healthy here. Their cloud revenue was also a slight miss. Okay, so, obviously this is one reason why Google is showing some downward pressure is because they missed on their earnings ever so slightly. But the thing is, and the thing to keep in mind, in this market, analysts in Wall Street are pricing these companies for perfection. You know what I mean? They are, their estimates and the consensus of what they feel the revenue should be and what they think it should be is not leaving much room for error. So then when they come in and miss by ever so slightly, Wall Street comes in and punishes the stock. But again, this is only some of the reason why you're seeing downward pressure on Google. But let's keep things in perspective, all right? So yes, Google missed on their revenue and on their EPS, but again, the markets are pricing in perfection and they're not leaving much room for error. So let's take a look at their actual revenues, right? I mean, year over year, they're growing at 15%. I mean, that's excellent. For a company like Google that's been around forever and their market cap is already so big, to keep growing at 15%, there's no complaints there. All right. And then, one thing I really want to go into is the, different segments that are bringing in this revenue. And this is one of the main reasons why you're seeing Google stock really suffer is because of their Google search, right? I believe that this is another big reason why Google stock is just been on a downward trend. And that's because of the threat to OpenAI, right? So this article by CNBC says OpenAI tops 400 million users despite DeepSeek's emergence. So obviously DeepSeek can be a threat as well, but OpenAI is almost like the new Google search in a sense, right? And not to mention, I mean, this is up 33% from 300 million in December. So you can tell they're growing a good bit. And so what this is doing is it's taking market share from Google. Now, in my opinion, I don't really think it's too much of an issue, right? I mean, it's okay, take some market share because the fact of the matter is Google previously owned about 80% of the market share when it came to, search optimization. And then you had, claims of them possibly being a monopoly. And obviously that could be a recipe for disaster in itself. So honestly, having another company come in and take some market share, it's healthy, right? Anytime you are almost a monopoly in a certain segment, right? It's normal for someone to come in and say, hey, let me try to compete and take at least a piece of the market share, right? But let's not forget that Google is also working towards, competing with OpenAI by having their AI overview. So when you go to Google something, you get the AI overview, right? So it's pretty quick. And the question I want to ask you guys as well is, what are your thoughts, right? Like, I love using Google. Like, I feel everyone is so, used to using it. And if Google is able to ramp up their AI, when it comes to search optimization and by using their AI overview, and if it's just as good as OpenAI, right? Are you going to switch to use OpenAI instead of Google search if it's essentially, giving you the same results? I don't think so. In my opinion, people, like Google, they're used to Google. It's what they know. And I don't see that really being a thing. But obviously that's one of the biggest reasons why we're seeing Google stock fall right now, is because of this threat of them taking away their, search business. That's obviously going to decrease like ad revenue and all kinds of things. Now, I will say this with the newer generation. This would be the one thing that would concern me, but it would be years from now, is, with generation beta or generation alpha, right? The newer generation, when they start using these search engines, they don't know the difference between Google or OpenAI, right? So if OpenAI is able to capture the newer generation, then I could see a problem later down the road, because again, I feel people that use Google and have always used Google, they're not going to stop using Google. All right, maybe a few, but the majority will not. However, if you've never used Google before and you start using OpenAI first, then you don't really have anything to compare it to. And in that scenario, again, this would be years from now, I could see Google search eventually losing even more market share. So something to keep an eye on. Again, these are the fears, but in my opinion, we are a long ways away from that being an issue. Let's not forget that Google obviously makes money other ways. And, some of those ways are their YouTube ads, obviously YouTube, and, their content creators are just, there's more and more and more and more. And the cool thing about YouTube is that there's a specific niche for everyone out there, and people like that. And I don't see that going away anytime soon. I can only see this growing more. Obviously, they have their Google Network, they have their service ads, and then their Google Cloud. All right. And again, this came in below expectations. However, this is still growing pretty substantially, which we're about to take a look at here in a minute. All right. Nonetheless, the company is growing profits very well. So let's go ahead and jump into that. I'm going to put it on a chart to kind of make it a little bit more visual for you guys. All right, so right here, I have a chart of Google and their total revenue. So in the blue right here, all right, that is their total revenue. And you can see this is growing nicely, right? This is spectacular. Just a straight upward trend. And you can see here, I actually have this extended out for estimates, right? So this is actually here towards the end is an estimate of, 2025, 26, and 27. This is what they're estimating. But again, that's what we want to see, right? We want, a company that is estimated to grow. All right. So then, looking at probably even more important is the net income. I will say this is a little bit lower than I would like to see. It's just not growing as much, right? You can see revenues clearly growing, but the net income just isn't quite growing with it. And, there's a couple of reasons for this. One of them is their CapEx spending, which I'm about to touch on. And another thing was their employees. It just had too many employees, right? They just weren't really managing that too well, and that's costly. And then they did a bunch of layoffs, and they paid like a severance package. And so that was a ton of money that they've been paying out. And so you're still paying the severance package, but you don't have these employees working for your company anymore. So obviously, once that starts to settle, things would look a little bit better there. But I have a feeling that's probably some of the biggest reasons why their net income is not growing quite as much as their total revenues. Nonetheless, as I was mentioning before, the CapEx spending, all right, I think this is another reason why the stock is falling. All right. And it's because they're spending a ton of money. They went from spending 52 billion, and you can see that, previously how much they've spent, 10 billion, 13 billion, 25 billion, 23 billion. It's kind of been flatlined here, right? And then obviously AI comes around and they need to build all these data centers and invest in AI, whatever it might be, right? But you can see here we went from 52 billion, which was a pretty big jump, to 75 billion dollars that they're spending to build their AI infrastructure. Now, one way I like to put this, all right, it's like you're building a road in a new town, right? You build this big road and there's no traffic on it, and you're like, why did you build a road so big, right? And it's because they're anticipating all the future growth that is going to be driving on that road in the future. So yes, maybe the road seemed like, hey, this is too big of a road. Like, you spent all this money on this huge road that we don't need. But again, they're anticipating the future, right? And so I do feel that's kind of the scenario here with Google and a lot of these other companies too that are increasing their CapEx spending, because they're just building for the future, right? So you make these investments now, and then you don't have to make them later. Now, these are estimates here, which, they're estimating that to stay, close to the same amount, 75 billion. I mean, we'll see. That's something to keep our eyes on. I personally would like to see that go down a little bit, but this is another thing to consider is with Google specifically, they've shown in the past that their investments pay off, right? And so that does give investors, or at least me, a little bit more confidence that, hey, they know what they're doing. They've made big investments before and they've shown to pay off, and that's what they're doing now. So that's something to keep in mind. Another thing to consider when we're looking at all the money they're spending on CapEx is, where it can pay off, right? And so let's look at YouTube and, maybe recommending better videos for their users, right? That's going to increase revenue. You have Google Sheets. You have, Google Word. You have their Google Search. You have a ton of different platforms. I think there's like 7 different services that they offer. And when it comes to all the platforms that they have over 2 billion monthly users using these. So I do think it's important to get ahead of the curve and, use AI, because that does seem to be the future. And with those many monthly active users, if it really starts to optimize, the way users use these platforms, I do think that these investments will eventually pay off. But nonetheless, this is something we want to keep our eyes on. We want to make sure that, as these quarters keep going on, that we are seeing their revenue and net income increase, and that these investments are paying off. Because if we start seeing the opposite, that could be a red flag. And then here on the purple line, there's just the EPS trend. And you can see, your earnings per share has been consistently increasing, which, again, that's what we like to see. So let's move on to a few other fundamentals of the company. First thing I want to look at is the cloud services. So I'm just comparing this to Microsoft currently. I was trying to actually get Amazon on here too, but for some reason it wouldn't load. Anyway, you can see here though, Microsoft is in the orange and Google's in the blue. But first of all, let's look back at 2016. Microsoft, had what, $23 billion in revenue. I'm pretty sure that's what that is. And, Google had 4 billion, like not even a piece of the market, right? Fast forward to 2024, look how close they are. Google is quickly gaining on this, right? In the cloud services, this is a huge source of revenue. And the fact that Google is catching, to Microsoft, which is arguably, one of the top leaders in this, that's pretty impressive. And that's something that I want you to keep in mind. All right, and then now we're going to take a look at their net income. Okay, so this is comparing their net income to other peers in the space. So we have, like I mentioned, Microsoft, and then I also have Amazon here. And again, I mean, you have Google in the blue, and I mean, when it comes to net income here recently, I mean, they are just trumping everyone else, right? So this is the cool thing about Google is, with their Google search and, their YouTube platform, you don't pay to use these services, but yet they're able to make billions of dollars through them. I mean, that's something impressive. Just think about that. All right, so going back to, let's see, net margins. All right, let's take a look at that. So, this is their net profit margins. All right, so how much money they're making per service that they sell, right? So obviously there's always costs incurred when you're, selling a service or you're selling a product, whether that's, manufacturing costs, or if you're selling a service, maybe, it's advertising, or, obviously maybe like a marketing manager, whatever it might be, right? Anyway, it's how much money you're making off your profits, which is big, right? You want to have big profit margins, right? Ideally. And you can see here, Google is in the blue, all right? And they've been increasing, but I think by average, we're around 29, 20 to 28. Profit margins are pretty decent, all right? And all right, so comparing this to Microsoft, or right there with Microsoft. I mean, Microsoft's a juggernaut too. I mean, look at 36% profit margins. And then you have Amazon down here at 9%, all right? But nonetheless, just comparing this to its peers, it's not like it doesn't have a lot of margin. So I'd like to mention this because it's just, obviously not a reason why the stock should be down. All right, so the next thing that I want to take a look at is the forward price to earnings. I think this is one of the main things you should consider when you're investing in a company. You have a company like Palantir that's trading at I think after this big fall that it's had, it's still trading at 80 or 90 times forward earnings. All right, just to give you an example. And then you have, let's see, Amazon trading at 33 times earnings. All right, you can see right here. And then you have Microsoft trading at 28 times earnings. All right. And then you have Google, which is currently trading at about 19 times earnings, under 20. That's insane for a company that has so much growth potential. And not to mention, it's a Magnificent Seven stock, right? Let's just be real. Out of all the stocks right now that are considered the Magnificent Seven, so Tesla, Amazon, Microsoft, Meta, Nvidia, Google is the most undervalued one. So with that being said, the purpose of this video, is Google a good buying opportunity? In my opinion, yes, I do feel it is. Anytime one of the big Magnificent Seven, get oversold and get towards, the 200 moving average, I think it's almost always a good time to consider, dollar cost averaging with some shares. Not to mention, out of all these companies, Google is the most undervalued, all right? And even if we were to go into a recession, right, investors are going to start looking for value deals, right? The companies that are overvalued right now or have a very high price to earnings, those are going to get hit first, right? Those are the most at risk. Obviously, it's not to say that Google can't fall more, right? It can. I mean, just taking a look at the chart again, we are below this 200 moving average. And previously, it doesn't happen too often, right? But you can tell that sometimes when we break below it, right? I mean, we had a nice recovery here, break, right, test, and then it does end in a bigger downturn, all right? Now, something like that, we're talking recession, right? I mean, this is not just... it's not just going to be Google stock that's down, right? If we break below this and continue lower and keep going lower, in my opinion, it's because the economy is not looking good and, the fears of a recession are at full play, right? And no one can time the market perfectly, right? So you dollar cost average at a decent deal, even where it's at right now, right? It's undervalued. Right. And obviously, if we go into a recession, then what happens? I mean, yes, companies' earnings go down, things go down, right? Their earnings per shares go down, which will decrease the value of the stock. But a stock that's already undervalued, right? It's just going to be extremely undervalued in a time of a recession. And so it's probably going to recover quickly too. So is Google a good buying opportunity? In my opinion, yes. And obviously, this is not financial advice. I'm not a financial advisor, and this is just for entertainment purposes only. This is only my opinion. But I feel anytime a stock gets close to, the 200 moving average, and it's one of the magnificent sevens, and then not to mention, we went over the PE ratios and all the revenue growth that it's been having, and in the earnings, management and all the leaders are feeling super optimistic that, their AI investments are going to pay off. I think in the long term, this is a great time to start accumulating some shares for sure. And again, I went over some short-term trades as well in the beginning of the video if that's what you're more interested in. But that's all I have for you guys in this one. I hope you found this video helpful, but let me know your thoughts in the comments. Do you feel that Google's a good price at these current levels, or do you feel that we might be headed towards a recession? So I hope you enjoyed this, and I'll see you in the next one.